The Fed raised rates, but there's still good news? We're going to talk about that next. Hi there, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates, and we're going to start with those interest rates. So we actually had a slight reprieve from week to week. The average 30-year fixed at 6.95%, according to Freddie Mac. You can check out the link below. With that said, now since then, we've seen the Fed come out this week and raise interest rates, which will push the 30-year fixed up next week unless we see some sort of reprieve in terms of rates or headlines that come through. So we did see it above 7 the week before. Now we're down to that 6.95. You can check out the link below. The average 30-year fix, according to Freddie Mac, is down there in the description. While you're down there, please hit that like, hit that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. Now, let's talk about that Fed meeting and potentially the good news that was within it. So the Fed raised rates 0.75 or 0.75%. Everyone knew that. That was already baked into the equation. But what they said and in their minutes is really the important piece. And in the minutes of the Fed meeting, that's where I took away a really positive message. Now, 30 minutes later, when Chairman Powell got on the microphone, he kind of washed all my hope and dreams away there, and I'll explain. But in the minutes, basically they said that they're going to be more market dependent than data dependent. So what that means to me, following the Fed and following interest rates and doing this for over a decade, is that being more market dependent, if you're thinking about inflation, have gas prices come down off their peak? Potentially. Have used car prices come down potentially off their peak? Maybe. Have we seen home prices stabilize instead of that constant appreciation? Yeah, absolutely. So, the eye test, we're starting to see that those inflation numbers start to come down. The data dependency is that inflation is still high. So if they're sticking with that, absolutely, they're going to keep raising like crazy, right? Now, if they're more market dependent, they're going to see the same things that I'm talking about and say, hey, we're making progress. Maybe we can slow it down. So that's the good news that I potentially took away. With that said, inflation is everywhere. It's in all factors. And really what it comes down to is the Fed needs to slow everything down. They need to be able to slow that piece down, so therefore they don't have to raise rates as much. We have a healthy economy. That's not a bad thing right now, but they've got to keep it tempered because we had low rates for way too long, actually. So with that said, when Chairman Powell came on the microphone and he started talking about some of these things, that's when he really poured cold water, is that the end is not near. We have a lot more work to do, quote unquote, which then signaled that there are potentially more rate increases. Now, what my hypothesis, if you made it this far, hopefully you're ready for it, is that, if he believes that, it does sound like the minutes, which is the collective Fed, that's putting out these minutes, if they're saying that they're going to be more market dependent, there is a lot of people in that room at that point saying, hey, maybe we don't need to go up as much. And then he comes out and says, well, maybe we do. So it sounds like maybe there's a differing opinion in there. So in my opinion, it sure looks like inflation has peaked. It's still high. I would say by the end of the year or into the start of next year, they're going to start to slow down those rate hikes, which then will allow for rates to finally stabilize and potentially start to come back down. So still a positive outlook for 2023. I did a video on that before, so I will make sure and link above. But you're going to see that, in my mind, the end is near. Now, how close is that end? That's really the question that we're going to find out in the next 30, 60, 90 days. But the end really is near, and they're telling us that in everything, from the minutes to, Chairman Powell pouring some cold water on that as well. So put your comments below. Let me know what your thought is. Where do you think we end the year on the average 30-year fix? Put that down below. I'd love to hear your opinion. Thank you so much for tuning in, and we'll see each other again very, very soon.